What's up, Skyview? It's Christos, and it is April 27th, 2017. We're just looking to add yet another trade to our portfolio as we are approaching that sweet spot of 45 days to expiration. So we just kind of want to bulk up on our positions. You can see a fairly low trade count, but it should be low at this time because we're winding down our May positions and just starting to add June positions. So once we get into that 45-day sweet spot, you should see our position count increasing and kind of bulking up. Now, one thing I noticed today is that we don't have a position in TLT, and TLT is the bond market. It's almost on the first cut, if you want to call it that. And for me, I just like to have a position in TLT most of the time. You know, it's the bond market. It's a very important aspect of the stock market. You hear it in the news a lot, stuff like that. So gold, bonds, oil, things like this are things that I like to have positions in all the time. So let's just go over to TLT. And of course, not the highest IV, 20, 20, and 39. But like I've been saying, 25 IVR seems like the new 50 IVR to me. Plus, when there's still over 45 days left till expiration, and I'm not exactly eager to get a million positions on just because we have time until we get to our sweet spot there, 45 days, I kind of like to just put positions on and, the most liquid underlyings that I'm trading regardless every single cycle, regardless of IV rank or anything like that. TLT is definitely one of those underlyings, and we can see it's been largely going sideways since about the end of last year. It's been a pretty good underlying to sell some premium in with these neutral bets. Just one thing to note about this market right now, let's just pull up a chart of the VIX. The VIX is at, again, new historically low levels all the way down here, right? So it's contracted a whole lot over the past week, pretty much ever since that French election news came out last weekend. And with the low VIX environment, these are reasons to take profits more aggressively or trade a little bit smaller, right? And that's why I think the last few alerts have been 4-point wide iron condors, just because it's a little bit smaller than our normal 5-point wide condors. And it's just another way to trade smaller, and that's a good idea with a VIX so low at historically low levels. And because TLT doesn't have IVRs that really kind of pop out at us and, make it a sexy looking trade, I guess if you want to call it that, I think it's a good idea to stay small. So maybe we'll try another 4-point wide condor in TLT. So I like to go to my Analyze tab, type in TLT here, and of course we are not going to this May monthly cycle anymore. We are going into June, 50 days left, and we'll just scroll down to the at the monies to get our search started here. So here they are. And like I said in the last video, I kind of default to looking at the 30 deltas / the dollar mark. So that brings us kind of to this 120, 119, 118 area. Let's just go to the 119. It's got the 29 delta, and we'll short there. And then we'll just go 4 points wide, and that will bring us to 115. And that is the 9 delta on this side. You can see the 9 delta right there. So that's about my wheelhouse, right? I like to long my deltas or long my strikes somewhere around the 10 deltas and short my strikes somewhere around the 30 deltas. That's just what I found has helped me collect 1/3 to 1/5 of the spread's width and collect at least $1, preferably more. And that in turn makes it a high probability trade and one that I'm comfortable with as far as what I'm risking versus what I stand to make in reward versus what my probability of profit is. So remember, it's not just risk and reward. There are 3 elements to the trader's equation. It's risk, reward, and probability. And what we do here at Skyview is generate a high probability of profit and then just create winners by managing those in a way that increases our odds even more. And once I started learning how to create winners, my whole mentality of trading just changed. It was no longer about trying to hit these home runs. It was just about hitting these singles, hitting these singles, hitting these singles, creating a high win percentage, and forcing the market to beat us. So I digress. On the call side here, let's go to right here. This is the 27 delta, 125 on this side. And 4 points wide brings us to the 11 delta, 129 on this side. And we can just scroll down to see what we've created. Let's also get that a little bit higher so we can see everything here. Uh-oh, looks like I did not hold down the control key on all instances. So I'll just make it quickly again. I think we were short the 125 and the 129 on this side. And then I will remember to continue holding down my control key when I go to this put side. I was at the 119 and the 115 here. All right, there is our spread. So 125 and 119 are the short strikes. So I like to just go to the chart and see what I'm working with. 125 to 119. So that would be there, and 119 here. Looks pretty good for me. I don't know. Maybe let's see if we can push that put side down a little bit. The only reason I say that is we kind of have room to with this 126 credit. If we take 126 and divide it into the spread width, 126 and divide it into the spread width of 4, 31%, and then 1 minus that 31, 32% gives us a 68% probability of profit. So pretty high, definitely a nice bet, but if we just widen it out even more, it's only going to increase our probability of profit. So we go to maybe the 118 and then go to the 114, and there it is, still collecting $1. And now we're collecting $1.04 on a 4-point wide spread, 26, and then 1 minus 26, or 1 minus 0.26, gives us a 74% probability of profit. That's how I like to calculate pop. So, pretty high probability bet, still collecting at least $1. On my 5-point wide entries, I like to collect like $1.20, $1.30. But on my 4-point wide, I don't mind collecting just over $1, just because the risk is a little bit smaller as far as my max loss risk. So my max loss on each side is 296, and my max profit would be 104. So that's like a risk 3 to make one bet. That's about my wheelhouse. So this one's looking pretty good. If we want, we can just go back to the chart and put some price slices on it. We're short the 118 and the 125. So I'll try to do this quick, and I'll have a little pop-up here that tells you to skip to a certain point in the video if you want to skip all this, because I know it can be annoying to sit here for a minute and watch me draw all of these price slices on the chart. I'll try to do it quickly, and if you want to stay tuned, sure, why not? So we'll edit the properties on that. 4 points wide brings us to 129. And then on this side, we had the 118, I believe. So edit the properties there. 118.02, close enough, right? And then 4 points wide would be 114. So I'll just throw the line in anywhere and edit it right from here. Sorry for the slamming on the keyboards. And we also want to make this, a different style here to show our max loss point. And then we gotta back it on up to get to the 116. There she is. So you can see our 116 really way down there. We haven't seen those, or our 114, I'm sorry, really way down there. We haven't seen that level since 114. We're talking all the way over here, which is September of 2014. So about 2.5 years since we've seen that level. Pretty interesting. But doesn't mean that we can't see it later on this year. You know, anything can happen. We know that price movement is completely random, and that's why we just try to take the importance of direction out of our trading by making a lot of high probability neutral bets and then managing them in a way that increases our odds even more. So that would be what we're working with here. This is our max profit area, and our max loss would be anywhere above 129 and anywhere below 114, right? 4 points wide from our 118 short put here. And remember, it's really not that important whether you pick the 118 or the 119 or whatever it is. Just do something that makes you feel comfortable. Stay largely neutral. Collect at least 1/3 to 1/5 of the spread width. Stay in nice liquid underlyings like TLT. Manage your winners aggressively. Stay patient with your losers. That is simply the name of the game. So let's go ahead and try to route this one. 102. I'll go ahead and click confirm and send on this. Edit it because I like to see the spread on what I'm working with, and kind of a large spread. TLT usually has that 10-cent spread width, but remember, this is a $120, $130 stock, so 10 cents on $130 stock is a little bit more liquid than 10 cents on a $50 or $40 stock. Usually we can get filled around the mid price too, and that proves how liquid TLT is. So let's go in around 102. Hopefully we get a fill pretty instantly. Oops, and I did not have my volume on, and you can see we were filled on it right away. So we'll go back to our monitor tab and we can see it working. There it is. So just adding another underlying to our portfolio. Again, there's no magic to it. We're just trying to stay in these liquid underlyings. I mean, we trade all of these underlyings every single cycle. It's not any different. Look, in TLT, our P&L yield to date, $428. So we've been making money in TLT all year. We're just going back to the well, rinsing and repeating. That's the name of the game, and that's all we can ask for. So that's about it for this trade review or live trade video, guys. I hope you learned something from it. Thank you for listening, and until the next video, take care.